unexpectedly lower inventories and steady to lower demand. The USDA September Hogs and Pigs report places the September 1st inventory of all hogs and pigs at 75.4 million head, up about 1.3% from last quarter, but down nearly 4% from last year, and well below pre-report estimates ranging almost 3% lower. This unanticipated decrease reflects that market hog and breeding herd inventories are about 4% and 2% lower respectively, each also coming in below the lower end of pre-report expectations. Each class of market hog inventories is down compared to the same time last year. The number of hogs in the heaviest two weight classes of 120 to 179 pounds and over 180 pounds are down 1.4% and 1.3% respectively from a year ago. The somewhat smaller number of heavier weight class hogs, which will soon head to slaughter, may help somewhat to temper seasonal price declines this fall. Looking further out, the under 50 pound and 50 to 119 pound classes both come in about 6% lower than a year ago, compared to expectations of only 1.7% lower each. Overall, compared to a year ago, there are now 4.7% fewer hogs weighing less than 180 pounds, which will be the market hogs arriving at processing plants from October 2021 through February 2022. The decline in lighter weight class hogs partly reflects that the June through August pig crop, at 6% smaller than last year, is also below the range expected pre-report, with nearly 7% fewer sows farrowed and 11.13 pigs saved per litter, or about 1% more than the 11.06 pigs per litter for the same period last year. With annual averages of 10.98 and 11.03 pigs per litter in 2019 and 2020 respectively, the number seems on pace with the upward trend observed over the last decade. Still, the smaller pig crop should imply a similarly smaller slaughter this winter. Farrowing intentions for the fall and winter respectively are down 4% and up 1% from the prior year, which suggests that slaughter levels in subsequent periods aren't in danger of getting much above year-ago levels, making it difficult to replenish frozen stocks of pork. And there is plenty of room in cold storage, as it remains at levels lower than a year ago when it was first drawn down during the COVID-19 pandemic. According to this week's USDA cold storage report, cold stocks of pork on August 31st are up 4% from the previous month and down 1% from a year ago, or about 24% from 2 years back. Beef stocks are up 4% from last month and down 8% from last year, while poultry stocks are down 3% from last month and about 20% from a year ago. The USDA forecasts U.S. per capita pork consumption at 50.3 pounds per person in 2021, with the number rising to 50.9 pounds per person in 2022, both of which remain lower than pre-COVID-19 levels of around 52 pounds in 2019 and 2020. These expectations for domestic demand make exports all the more important. The U.S. exported 508 million pounds of pork in July, or about 8.5% lower than in July of 2020. Higher exports to most other major markets were unable to offset 62% lower shipments to China and Hong Kong and 7% lower to Canada. These cuts reflect increased pork production in both countries, especially as China reportedly recovers from African swine fever. Forecasted exports for the remainder of 2021 are trimmed based on expectations of continued lower Chinese demand. U.S. pork exports are estimated to be 1.575 billion pounds in the third quarter of 2021, or about 3.2% lower than last year, with fourth quarter exports revised 25 million pounds lower than last month's forecast, but still 3.6% higher than last year. The first two quarters of 2022 are forecast to be about 4% and 3% below 2021 levels, respectively. All in all, total pork exports for 2021 are expected to exceed 2020 levels by about 1% and then drop by about 0.5% to 7.3 billion pounds in 2022. Hence, even with the anticipated decrease in Chinese demand, exports should remain fairly strong. Even with the current high cost of production, prices should keep producers in the black for the remainder of 2021 and on into 2022, depending, of course, on the corn harvest and if pork export demand holds out. The forecast presented here is for the national weighted average net price on a carcass basis for all transactions for producer-sold Barrows and Gilts, including negotiated and contract prices. This net price should be more reflective of what producers receive on average, and normally averages a premium of $2 or more over the base price But for the period of high prices from June through August, actually averaged $107.64 a hundredweight compared to $111.79 a hundredweight for corresponding net prices for negotiated or spot transactions. In general, hog prices tend to be higher in second and third quarters with lower prices in first and fourth quarters. Consistent with that pattern, prices are forecast to drop to an average of $85.12 a hundredweight for the fourth quarter of 2021, reflecting a kind of balancing of expectations for supply and exports being revised lower for the near term. For 2022, prices are forecast to average $81.20 a hundredweight in the first quarter and then rise seasonally to $87.30 and $89.60 a hundredweight in the second and third quarters, respectively. However, if during that time further setbacks are discovered for China's recovery from African swine fever or Chinese producers otherwise pull back expansion, for instance, due to rumored limited profitability, then greater export demand and higher prices may in fact be realized. For the University of Illinois and Western Illinois University, I'm Jason Franken.